Hello out there, dividend growth stock investors. You got Colby here, the DGI Crab, wishing you a happy Saturday. Hope everyone's weekend is off to a very nice start. On Saturdays, I like to take a little time out and bring you some good news over the week in terms of dividend increases to the 60 stocks that DGI Crab covers here on this channel. DGI Crab is all about dividend growth stock investing, attaining that passive income so you can reach financial freedom. And as you may or may not know, I take those 60 stocks, break them into 4 different tiers based on your age. So you've got the low yield, super high growth compounders for the 30 and under crowd, the higher yield, slower but steady growth stocks in the 54 and up age group for tier 4, and then tier 2 and tier 3 in the middle. And this is the third Saturday so far here on the channel. Still a young channel, so I would appreciate if you hit the good YouTube buttons, you know what they are, and help get this this channel boosted into the algorithm and all of that. But hey, we've got a couple of dividend increases. Got a nice streak here going here on this channel announcing the increases, and I am happy to bring those to you. So let's jump in here. First one I'll cover is NNN REIT, stock ticker NNN. This is for the tier 4 investors age 54 and up. Now, hey, I'm not a financial advisor, so if you're going to invest in NNN REIT or any other stock or security, you should always do your own due diligence. Don't just listen to this one crab's opinion. But the 54 and up age group, I want higher yield, steady growth. Doesn't have to be explosive growth, but just predictable growth without dividend cuts. There are 3 REITs in that group of 10 stocks for the 54 and up group, and NNN is one of those. And listen, it's exactly what we are expecting and needing for this group of stocks. We got just a 2.7% increase. They're going up from 56.5 cents a share to 58 cents a share per quarter. 35th consecutive year that NNN has increased the dividend. So right now that's yielding right at about 5%, which I wouldn't say is on sale. I wouldn't say it's overpriced either. It's just kind of right where it probably needs to be. It's in line with its 4-year average yield. And 2 to 3% year-over-year dividend growth is sure, it's not super exciting, but let's put this into context. The last 12 to 18 months in this high interest rate environment has been absolutely brutal on REITs. A lot of REITs are struggling. There have certainly been some REIT dividend cuts over the course of the last couple of years. Not from NNN. NNN just continues to trot along, doing their thing, giving shareholders dividend increases instead of cuts, or instead of just nothing at all, instead of just staying absolutely flatlined. So this is what we want to see. They're going to help us keep up with inflation here to an extent. And hey, 35 years in a row, there is, I believe there's only 2 REITs out there that have a longer dividend increase streak than this. Federal Realty Income, FRT, and I believe UHT is has maybe a bit longer of a streak than this. But hey, nice work, Triple N. You've done exactly what we needed you to do in a tough year. And the second one is Union Pacific Group, or Union Pacific. So Union Pacific, biggest railroad in the country. And listen, they are in my top 10 all-time favorite dividend growth stocks. Huge fan of Union Pacific. Union Pacific did a 3% dividend hike. They're jumping from $1.30 to $1.34 per share per quarter. 3% hikes are not as exciting in tier 2. That's our 31 to 41-year-old investors who usually are going to be looking for a high single digit dividend increase streak, but Union Pacific is an interesting one. So if we take a look at the history of Union Pacific, see, there's some companies that pretty regularly increase their dividend, like predictably on a certain quarter. So you get 4 quarters of a certain amount of money, and then kind of on schedule, the company increases the dividend. You almost know exactly what to expect. Union Pacific has this interesting history where they've done increases sometimes twice a year. If we take a look at the history of this dividend, and just I will point out they've got 17 consecutive years of dividend increases, working on year 18. So we can see here we've got that $1.34 up from $1.30. And 2023, they kept it right at $1.30 all year. But then if you go back to 2022, it was $1.30 for the last 3 quarters, but then that first quarter was $1.18. So they only did this one increase, but the total payout of 2023 was still 12 cents higher. So 2023 was kind of a slower growth year. If we go back to 2021, you can see the $1.18. They had 2 quarters of $1.07. They were at 97 cents prior to that, and then they stayed at 97 throughout 2020. Here you can see they did their increase in the third quarter, going from 88 to 99. So sometimes those dividend increases will come a little bit off schedule, but consistently over the long haul, if we look at their dividend scorecard and see kind of how all that totals up, the 5-year growth rate comes out to be about 9.13%, and they're currently yielding 2.21%, which it's not an amazing deal right now. I'd say that they're fair priced right now, not but certainly not on sale. But this is definitely one where anytime that yield starts to climb due to the share price dropping, I'm pretty quick to swoop in and add shares of Union Pacific. I think they are here for the long haul. More tracks laid across this country than any other railroad company in the country, and it is if you think about it, railroads are green tech because it's a lot more efficient and climate friendly to move large cargo across the country by train than it is by truck. So I don't think that Union Pacific is going anywhere anytime soon. I think they'll continue to reward their shareholders with maybe off schedule, unpredictable dividend increases, but they'll certainly throw you some dividend increases along the way. So I'm hoping maybe this will be one where it's maybe just a couple of quarters go by before they increase it again, because this one was just 3%. But we'll just have to wait and see. But again, this is just kind of an interesting one, and then you can just see sometimes it could be a little streaky, but like I said, in 2023, it was 2.36% annual increase. We kind of looked under the hood on that. 2022 was 18%. And then you got a 10, a 4.8, a 20. So, a little streaky, a little inconsistent, but you can see there's a lot of double-digit years here. And then just here and there, they'll have a single-digit one that's a little meh, but certainly not a cut either. And the yield stays pretty consistent. Just a really solid performer. For as large of a company as it is, it's kind of under the radar. I don't see a lot of people, a lot of dividend channels on YouTube talking about it, and I really think that they should. So that is the good news in terms of dividend increases on the channel. For our 60 stocks in the portfolio, we're off to a great start so far. These companies are doing exactly what I thought that they would be doing and what they have been doing for a really long time. They're rewarding shareholders with profits so they can collect that passive dividend income. So until next time, everyone, my name is Colby, the DGI Crab, and remember, when it comes to dividend growth stock investing, patience and perseverance accomplish all things. Keep that in mind.